You always had to own more gold than silver in my mind. But early this year, when it broke below 30 and I looked at the fundamentals, I said, whoa, this is silver's day in the sun, so to speak. The US investor and the investment community is still caught up in AI and crypto. If you're going to buy the AI story, you have to buy copper. You can't have one and not the other. You can't tell me you're going to build all these places and all these data centers and light all this wire and everything that's going to be needed to get this electricity to these places and not be bullish on copper. The uranium story is probably the best of all the metals.
Okay, ladies and gentlemen, so today we have Peter Grandich on our show for the second time. And today we will discuss the US economy, the commodity sector, precious metals, and many other very interesting topics. So Peter, thank you so much for being here.
Happy to be back with you. Thank you for having me.
Thank you so much, Peter. So since the last time we spoke, a lot happened. And I would like to begin by talking about the US economy. So what's your macro outlook on what's happening right now, and what would be some of the things that you would be paying attention to right now?
Well, I guess by noting that for the first time in, I don't know, several years, at least five, that I've taken a bearish position personally on the US stock market would suggest that I'm not expecting much upside, obviously, and looking actually for both the economy and the stock market to roll over into the new year. There's a whole host of things, some of them old that have been around for a while, from debt to deficits to some of the new ambiances, what's happening geopolitically, what's happening in terms of uh, different markets performing much better than the US. You know, I began the new year believing that the US stock market would end up either side of flat. And I suggested in our planning group here in the US that non-US equities were a much better choice than US, especially a place like China, which at that time there were still a lot of people, and still are, quite negative on China's outlook. I think that will continue. I think the areas of the world that are going to see growth and positive movement are basically in the East, and those that are Western Europe and North America are going to struggle. So it's a quite bearish view. I'm not looking for a collapse. The only thing I will tell you that changed since we last spoke, I didn't think we could have a sharp sell-off this year. I thought the market would meander and be either side. What they have done in this AI to have formed something far worse than could have ever been perceived in the top of the dot-com, basically are funding each other, a 21st century Ponzi type scheme, I think is really setting us up for a huge, huge decline. The only thing is bubbles tend to go further and blow up bigger than we can imagine they can be. But when they burst, it's ugly, and this one's going to be ugly too.
Yes, and the last time we spoke, Peter, we also talked about all the deals that Trump could make with all the countries in regards to tariffs. So how is that playing out? Will it be similar to what you expected, or will it be
Yeah, so
different?
I have argued, first of all, I'm a big believer in BRICS. The BRICS movement is what kept me so aggressive in gold when a lot of people were not looking at it, much under 2000, because it was obvious that banks that were going to be involved there in that part of the world were accumulating gold heavily because they're going to use it in some form of transaction, either just between themselves or maybe one day a much broader universal way of using it. And so it's always been key to me. So when Trump took over, Trump made, in my view, there are things that I like about him, but one of the things I disliked greatly is he took a big stick into this trade war instead of an olive branch. And I think he did more to damage the already de-dollarization that was occurring and people moving away from the United States. And when you look at it and you think about it now, he took over in January. In March and April, he and Musk were talking about Doge was not only going to pay down the deficit, but pay down the debt. And all these countries were going to have huge deals. But net, net, right now, as you and I speak, we don't even need one hand to count the number of actual trade deals that have been signed, sealed, delivered, and enacted. And they're not even talking about it anymore. I don't like one of his right-hand people, Ludnick et al. He's a mouthpiece in my view. And he was out every day about these great deals that were coming all over. And guess what? They haven't occurred. And I think that's another negative. And as much as people say, oh, look how well the tariffs are doing. Yeah, the tariffs are doing well, but it was just another form of taxation to the American consumer because it's been basically a combination of Americans importing those products and paying the tariff and the people selling it. But when you combine that, when two-thirds of Americans are working paycheck to paycheck, and we're seeing more and more people in this K economy going to the downside versus the upside, let me make one very important point that I think no matter who's listening, wherever they are, the Wall Street caters to the top 10% wealthiest people in America who happen to own 86% of all the assets. They give a little lip service to the next 40% that own the remaining 14%, and they have no real care about the bottom 50%. But that's the bulk. And those folks are not living in the world that I and you and others live in day to day. And, they have somebody else cooking for them. They have somebody else driving them. They don't fly commercial. All those things, that world is doing okay, but the rest of our economy is not. And that is going to pull down even them, not to where they're broke or losing a lot of money, but the essence of this false facade that Trump continues to talk about based on the stock market and not the reality of what's happening in our economy in the real world.
Yes, and I would like to talk about the medium of exchange that we all have to use. So the US dollar has been relatively weak recently, and I think I was looking at the chart right now. It's just uh, touching the
A
support
14,
levels.
14-year trend line. Very
Y-
important that you saw that. Yes.
Yes, and so do you believe it has lower to go, or do you believe it could bounce from here?
Well, normally you expect a bounce, but this is the third time it's touched it. And each time it's touched it in the 14 years, the rally was less and less. So yes, there still could be one. We have a very short U.S. Dollar market right now. A lot of people are short, so there could be a short cover and rally. But I don't think that it has the ability to reverse itself. One of the things that's quietly happening is we are having a bond crisis in many parts of the world. For a lot of years, our rates were so much better that money flowed into our bond market and treasuries and people converted to dollars. But now places that used to be much less in terms of yield are seeing dramatic rises, no more important than in Japan. And so those are areas that might have put money into our treasury market and buy dollars who are not doing it. We've just seen China again sell more treasury bonds, and the latest that we can look at is July. So the dollar is more likely to break that downtrend, whether it's on this one or one more little bounce, then bounce strongly and create a new bull market. So I would say that the chances are more likely break to the downside than to rise to the upside.
Mhm. Thank you for that, Peter. And if we look at, so we have two big forces. We have the deflationary force and the inflationary. If you look at the deflationary side, it's the stock market valuations, the debt levels, and everything. So, what is your opinion on this balance that we're having right now, and which one do you believe could win in the relatively short term? I mean, in the next few years.
Well, the inflation numbers that we're told by our government, at least, are not in reality. Anybody that's living knows we've suffered much more than 2/10 or 3/10 of 1% cost rises. We've had double-digit rises in everything that's important to an American. Car insurance, home insurance, health insurance, food, gas, whatever it may be has gone up a lot more. But the government is resorting to trickery in a much bigger way. We know Trump has already fired the person that was in charge and supposed to be the person that's going to come in. They did something that almost no one spoke of, but signaled to me what they're going to resort to try to hide the real inflation. We have what's called a consumer price index. It comes out monthly. It's a government statistic. Well, they have announced publicly, and it's there for everybody in writing to see, that they're going to remove the cost of long-term care out of the index because it's risen too much and it's not given a fair representation. Well, that's okay, except that 70% of Americans age 65 and over are expected to need long-term care. So you're going to remove something that's going to be most needed by a vast majority of Americans simply because it's not it's rising too high. That's just one of the things. They also do a lot of trickery intra-month. Let's just say, for argument's sakes, steak went up more than chicken. They just take steak out of the index that month and use more chicken. But people that were still eating steak have to pay that much more. So my argument is governments will err on the side of inflation. It's easier to print a lot of money and go through high hyperinflation for a government than it is in very deep deflation like we last saw in our depressions, in the 1930s and all. So I think that we'll continue to see higher inflation no matter what the government tells us, and the government will only option to continue moving in some fashion forward is going to be to print more money. They're not going to restrict the money supply. We're not going to see what Volcker did at the end of the 1970s and tighten so much. And here we have a government right now, which is just an amazing thing. I have to tell you, I'm in my 42nd year in Wall Street, and it's an amazing thing that our government now has been shut for several days. We've just had a couple of airports that couldn't work because the guys are not getting paid, so they decide they're not going to be air controllers. And people are going around like everything is okay, and it's just not. And it's all this facade that the Wall Street, that's why Trump keeps talking about as the stock market is my indicator. Because if he looks at the other indicators, they're not doing very well. And so I just think that inflation will be the route, not deflation, for the United States at least to take.
Yes, and we keep getting these unemployment revisions every single month as well, which is fascinating the way they can just keep doing it over and over and over again. But yes, the reality is not looking great with the recent numbers. And so, Peter, let's move on to the commodity sector and precious metals. So, gold is at 4,000 per ounce right now, which is, really, really well. It performed really well. So, a lot of the drivers that moved gold to this price are still there, I suppose. But do you believe right now it's way overstretched, or do you believe that those drivers could still move it way up?
So let's eliminate two people out of the thought process. One, there's the perma bulls who for 50 years always say gold's going to the moon, you have to own it and all that. And much of Wall Street who treat it like kryptonite and will never own it because it flies in the face of what they sell all day, and that's financial assets. So let's take them out of the equation. The reason I became so bullish, in fact, to the point at the end of 2021 to sell all stocks and bonds to just own physical gold because I thought it would go up the most, is because of what was happening with the BRICS and central banks. People have not accounted for how critical of a change it was from central banks going from net sellers, which they were through the 90s through the early 2000s, to be such aggressive buyers, and what impact that was having in the market. Mind you, that was happening while investor interest in gold here in North America, both Canada and the US, remained flat. There wasn't any marked increase. In fact, till just a few weeks ago, the ETFs that owned supposedly physical gold were net sellers. And so this was not something that Wall Street or retail investors were in. This has been driven primarily up until recently by huge central bank buying. And of course, the Bitcoin would enter and the cryptocurrency argument would enter. And my argument was that I will never look at those until central banks decide they're a worthy investment because they're the folks that have the biggest amount of money. They're not focused there at all. They've been set on the gold market. So while very pleased from someone that was telling people as low as 1,300 and through 2,000 to own it versus stocks and bonds, to see it at 4,000 now is even a surprise to this really strong bull. Would have told you back 12 months ago, 18 months ago, yeah, 4 or 5 is possible, but 3 to 5 years down the road, and here we are. And what's real interesting about it is, and I think this is not being spoken enough about, the paper market has just been beaten to death. This is a group of people, we used to call the Comex, Crimex, some of us still do. London and New York paper trading of gold was always a net negative towards gold. Every once in a while they might have participated, but they were really playing the downside and all. And there's been arguments why they're short, and there's been so much loaned out, and I'm not going to bother with that today. But what transpired and what kept me so bullish is how the Far East became the place where gold is trading now, to the point where London and New York is second and third tier. Same thing is happening with copper, and one of the reasons why copper is being so strong. And one of the things we need to learn out of that is the future of the world economy is not US based anymore. It's in the Far East. And that's really, really critical. The only negative that I would tell you, if you want to call it a negative, is this, and this is how I've approached it. It's a round number. There's nothing to look technically other than markets being overextended, overbought. The likelihood is that once we have an actual spot price closing above that and also $50 in silver, it may last for days or even a couple weeks, but the likelihood is that'll be used as some people to take these profit taking. And when a market is as overextended as it is, the profit taking can appear to be pretty strict, hard. A 10% correction, which would be, oh my God, talk to somebody about 3,600 now. But in the confines of a much longer move, those of us, even us bulls who thought 5 or 10,000, that's really for the perma bulls. That's a selling point for the people. It's not unrealistic anymore. And may I say this one thing, which is important I know bullish people want to hear it. So when I started in the business in the early 1980s, the Dow Jones Industrial Average traded between 700 and 1,000 for 13 years in a row. In fact, in 1982, I think it was, a Business Week article ran that everybody talked the front page and said equities are dead. And everybody on Wall Street basically said stocks are they're going to meander for years. And a guy came out of Gainesville, Georgia that no one knew of at the time, but he would become very famous, Robert Prechter Jr., and predicted a Dow 3,600 on something called the Elliott wave theory that no one knew about at the time. And they scoffed at him. They made fun of him. Well, we all know it went a lot further than 3,600. And the reason I tell everybody that story is not to say that I think gold's going to go to 40 something thousand too, like the Dow. But you can't just assume just because it's never been there that it can't get there, because that's what people did about the stock market before. So I would say that there's still upside and substantial, but it's no longer cheap. And what I mean by that is this. In our planning group, we have told people, very few want to listen, when gold was a lot less, buy it and hope it doesn't go up. And I have to tell you something. When you're sitting with people and your advisor, and your advisor's telling you, buy something but hope it doesn't go up, they almost all did the same thing. Mr. Grandich, why would you want me to buy something and hope it doesn't go up? And my response would be, is based on all these financial assets you own, if gold does go up a lot, chances are these have gone the other way. So buy it as insurance, just like we have car and home insurance, and hope our cars aren't stolen or our homes burned as well. That cheapness or an insurance policy is not cheap anymore. But there is a need for certain people. Now, I'm not in this camp. I'm not in the camp that the world's coming to an end. I'm going to need gold to survive and all that. I've never been and never will be because of my personal faith. But I know that there's people that are. And those are the people that need to keep owning it no matter where it goes. But for pure profit of buying and selling, I don't care what it is, I just want to make money and move on, it's no longer cheap. It's going to be very hard to double from here versus how it just doubled in the last 2 years. But that doesn't mean you can't make money off it because the people that look for it and develop it and sell it, gold producers are they're just legally printing money now. If I may, I know I'm going on here, but I think this is important. Think about the company that produces it right now, gold mining companies. Their cost is anywhere from 1,200 to maybe as high as 2,000, depending where they are. We'll just use that number. That's what they have to spend to get an ounce of gold out. Well, they sell that ounce of gold for 4,000 now. So let's just say gold does go to 5,000 in the next year. That increase, 97% of it's going to go to their bottom line because their expenses aren't going to go up proportionate to the price. So if you are a believer of higher prices and it can go, this is the time where mining shares and even for people with risk juniors are more attractive now to me than owning physical gold right now.
Yes, and I would love to touch a little bit more on the miners as well, but just um, would you agree, Peter, that retail in general in the West are still not really interested in gold that much, especially if you compare it to China, Asia, and things like that?
So that's why I like talking about you and I watch you. You're really on board on things that recognize that other people aren't. So I've been using this example, and you can look on it. It's on the internet. Basically, every weekend, Chinese consumers are going to malls to buy gold. Literally, just malls that are just selling gold. There's nothing else in the mall but people selling gold. And they're taking their income and they're using it as an investment, not just because they wear it pretty and all. Here on our weekends in the United States, people are going to malls to buy things that they really don't need and don't have the money to pay for, and they're borrowing it. And I use that as the two difference. In terms as an investment, you're absolutely correct. The US investor and the investment community is still caught up in AI and crypto. They may now spend 30 seconds in our financial media. Oh, gold went to a new high today, and then right away to AI or crypto or something. We have not seen that. One of the things that I've noticed, and I've only noticed it in the last several days, is I am hearing from people who just happen to follow what I do, and they're writing things like, I've never owned it before, but I'm hearing about it. But my financial advisor says it's just a fling, it's not going to last, yada, yada, yada. And we're seeing that in the junior resource market. People are selling their junior resource stocks saying, well, this never lasts. It always goes back down. Let me get out while the going is good. And you don't want to say a sentence which always comes back to bite you in that this time it's different. It's not so much that it's different at time, but there's uniqueness to the factors that didn't exist before. And that's what's going to be the challenge if we are correct that the gold market is going to go higher, that we're going to have to let go of those chains that used to make us head in a certain direction and recognize that it is somewhat a little bit different than maybe before. And that's the bet you're going to have to make. I have made that bet. While I don't own physical gold anymore, I am I am loaded to the point where the wife says, if you have any more, you may want to look for a divorce attorney. So understand that, I am extremely bullish, but I'm more bullish on the people that make money off of gold than gold itself.
Yes, and Peter, 2 years ago, if someone would tell you that gold would be at 4,000, would you expect the miners to perform even better than they have?
Oh God, yes. They are even the producers. So understand as much, and they're all up 100 and something percent. And this was something that began the year with that, loaded to the gills on the producers. But I shifted to the juniors in recent times. But I would have said to you, Jeepers, at least double the price where they're at now. But that is because the industry itself, particularly as we go down to the junior resource market, is not even close to the size it was back in the last great bull market in 2010. I will argue there's less mining desks, there's less mining analysts, there's less people devoted to metals and mining than there were 15 years ago, even though the markets have grown dramatically. And there's this dramatic competition. The biggest single competition is cryptocurrencies. Cryptocurrencies, if you think that, let's just say they didn't exist or exist in the way that they do now, a lot of that money would have found its way into the metals and mining stocks and all. So it is more of a challenge at this time. But that shouldn't take you away from to making to realize that how compelling it's going to be for those companies. I'm looking at copper at $5.12. I'm looking at worldwide production declining rapidly and all. And if you're going to buy the AI story, you have to buy copper. You can't have one and not the other. You can't tell me you're going to build all these places and all these data centers and lay all this wire and everything that's going to be needed to get this electricity to these places and not be bullish on copper. And we're watching major copper producers having all sorts of difficulties in seeing production fall. So there's a very bullish argument for metals and mining right now. And you're right. If you would have told me these prices, I would have said my portfolio is at least twice the price. But that shouldn't get me upset. That should just get me more enthusiastic that there's still a lot more to come to the upside. At least that's for my own thinking.
Yes, and would the story and view on silver be quite similar?
Yeah, you could throw a dot now between silver and gold. If you said to me, pick one versus the other to keep your wife or daughter alive, I'd have to go like this because they're both likely to perform relatively close. One of the things that silver will have going for it is it's only first going to be breaking out when it gets above 50. And understand this, people are using a $50 price from 40 something years ago. Adjusted for inflation, that's almost $200 if you adjust it for inflation. So while, yeah, it's a round number and everybody goes, this is the highest price it's ever been, not adjusted for inflation. That's why I said silver can get to a triple digit price. And I'm not, listen, I used to get picked on at shows because I used to say this about silver until early this year. I used to say owning it's like kissing your sister versus gold. You always had to own more gold than silver in my mind. But early this year, when it broke below 30 and I looked at the fundamentals, I said, whoa, this is silver's day in the sun, so to speak. And I rank it right up there with gold. I wouldn't choose one over the other. So I think that and copper, they just have markets that are going to move higher with some corrective phases and don't get caught up that if we do get these numbers touched and then break and everybody goes, see, that's the top. It's just overextended. It's not reversing fundamentals at this point.
Yes, and gold to silver ratio looks really good as well. If you look at, yes, both performed well, but historically speaking, silver is still quite cheap compared to gold, which is one of the reasons I'm more heavy allocated towards silver at this point. And Peter, just on uranium as well, what are your macro thoughts on the current uranium market?
So what I have said is I've been very blessed. Part of the best 5 year period I ever had is because of what I've done with uranium in the last 5 years. The first rally, I caught it. I got out early this year. They dramatically dropped again. I went back in. I doubled and moved away. Now they've moved up since that, and there are still clients that have them, and I think it's going to go higher. The uranium story is probably the best of all the metals. It has the best looking fundamentals. The problem will always be it's such a thin traded market at this point in time, and there's so few producers. See, when you talk to me about any other metal, I can show you 50, 100, 200 producers around the world that are publicly traded. Try to find a dozen publicly traded producing uranium companies. It doesn't exist. Now, so a lot of the money that does go, it goes into the exploration companies and all. And that's great, but they may miss this cycle by the time they develop it, bring it out, and be able to sell it. But it's a near perfect storm. I think the focus on it will be that there is more of an interest. But again, if you think there's not enough interest in gold, given what gold's done, there's even less interest in the uranium end. I think they go higher, but I couldn't first buy them here only because I bought them so cheap twice before. And I had that mental block of, okay, I made 100%. I can't first step up to buy. One of the things that I operate on for myself as well is if I can't first buy something, that's my first signal that I need to sell it. I think they go higher, but a lot of them are greatly have moved. And so I think if you own them and you want to be a strong holder, fine. But I would not because you said it, I think I'd play a silver play now before I play a uranium exploration play.
Yes, and even with gold, I have to force myself to take some profits as well right now, even though I do believe also, similar to you, that there's still a lot of upside, especially in the miners. But I also feel like I personally, because I get sometimes it's quite difficult for me to sell if I like the asset, if I believe there's a lot of opportunity, I have to force myself to sell. So I've been doing that this year, but I do hope that I'll be sorry for doing that and the price goes even
Well,
further.
you can't look at it that way. You have to look at there are no boats. There's this feeling, oh, this boat, and they're going to sail without me. Everything's a ferry. You sell something, something else will come in that'll look attractive that you'll get on board and go with it all. And if I may, and I'm noticing this now in a lot of metals players, they're using emotion to make their decision making. They don't have a plan. And I can just tell you, I spent 13 years working with a National Football League team here, and I was around the coaches the whole season. And one thing I learned is they spend their almost entire time once the season starts planning. So when the game is over and the players go home that Sunday night, they're already going in the office starting to work out the plan for the team they play next week. And they have a written plan. By the time that Saturday meeting comes, when the coach speaks to the team and then the defense and the offense, they have a written plan on how they plan on going into the game. And if it isn't working in the first half, they rewrite that plan and go out in the second half in another way. Right now, I'm finding too many speculators without any plan. Everything is being traded. They're looking at gold, they're mining shares, the stock market, whatever, without a formal plan and targets and ready to act. And I know hope is a wonderful spiritual strategy, but it's the absolute worst investment strategy. And I hear this sometimes. I only hope it goes back up so I can sell. No. What is going to drive it to go back up? And if you're not prepared to buy it at this point, who do you expect to buy it to drive it up so you can hope and get your money back? So, written plan, sticking to that plan is going to be critical here, especially since if you think the markets have been volatile now, I think they're only going to become more volatile. You know, we're seeing this rise, we're seeing the VIX go lower and lower. This is just screaming that we're in for a huge, huge move. And usually that move is opposite of what it has been doing. That's why I'm so willing to and have made bets to the downside because as much as the stock market has shot up dramatically, it appears it's vulnerable now to a shock to the downside.
Yes, some great, great points, Peter. So these are all the questions I had. Is there anything else that maybe you would like to mention that we haven't covered?
Well, I just think that uh, we have to recognize that, for me anyway, it's not how much you're going to make going forward, it's how much you don't lose, which is going to separate you from the winners and losers. I think capital preservation now is more important than capital appreciation, especially if you're like me with gray hair or no hair. A young man like you can take more risk. You could have far less money, but you could be more risk oriented. What I have found in a lot of our clientele is, late 50s into 60s and 70s. We don't, the mental anguish. Let me leave you with this. If you ask me after making and losing lots of money, not once but twice, but God given me this third opportunity to make it back and then some, the mental anguish is what most investors fail at. There are people that appropriate finances correctly. They know that they can risk this dollar and not change their family's lives or whatever. But the mental anguish that they suffer if they lose is far greater than anything that the finances cause. And we don't measure as an industry people's mental tolerance. For instance, I will have a husband come in and sit the first time in the planning and say, oh, yeah, we could do this and that. And then when you get to talk to the wife, she goes, no, there's no way we're going to do that. And so, what I would just tell everybody is make sure your mental tolerance is prepared for the unexpected. And that's the same thing even now, even though the gold market looks really good and things look right for juniors and all. What if it isn't? Can you get through both financially and mentally if it goes against you? And if you can, then you have a can't lose situation. But don't get to the point where you have to be like me and a few weeks ago have to have a come to Jesus meeting with your wife when she says, whoa, that's enough. You've gone too far. So make sure that if you are sharing your life with others, not just yourself, that they partake and understand and you appreciate their concerns about risk tolerance and things of that nature. Because we get caught up in bull markets. Bull markets suddenly, like you just said, oh my God, gold's 4,000. This is great. Yes, but it could also be 3,000, even though we don't think it's possible. And if it is, what happens to our life? What happens to everything that's more important to me than money? And those are the things that I would tell people they need to watch.
Yes, so Peter, I really enjoyed the conversation. Thank you so much for your time, and I hope to have you back on the show.
My pleasure, and keep up the great work. I've been watching your videos, and I hope things continue to work out well for you. God bless you.